This is the briefing for Friday, July 11th. It appears that the stock indices are still moved by the news as opposed to moved by the perception of value on the part of traders and investors. And that perception of value probably is in doubt, mainly because of the lack of information on the settlement with tariffs. So basically, we have been in a rotational pattern in the indices for the last six trading days. So you can see that this is the spiders on a 60-minute basis. So you can see the rotational pattern here. This is the Qs on a 60-minute basis. And this is the Russell on a 60-minute basis, the IWM. Now, I want to point out there's a couple things that happen here. Intermarket divergences is basically where the indices are not basically tracking in the same direction to the same extent as they would if they were tracking together. That gives you an example of right here. You can see that we've got this rotational pattern here, we've got this rotational pattern here, and yesterday we had a breakout move in the IWM, which we did not get in the NASDAQ. We got a little bit of rotation around the upper extreme in the spiders. So yesterday we had this breakout move, which was an intermarket divergence between these other two indices. But on a longer term basis, on a daily basis, the spiders and the Qs have all moved to all new all-time highs, and the Russell has not, so it's been lagging. And so the weekday subscribers, I discussed this in the briefings, is that potentially when the indices begin to trade together, a strong trend rises all boats at the same time, and basically we should see the indices basically moving in conjunction with each other. Intermarket divergences tell us that something is wrong within the indices themselves or within the perception of value, and that potentially we could see some type of alternative moves. The question is, we don't know which one is right, whether the Russell is correct and not following on a daily basis with the other indices, or whether the other two indices are correct and the Russell has a lot of catch up to do. And that's what I discussed, that if this intermarket divergence is going to be eliminated to the upside, then certainly we want to be looking for long positions in the IWM, because it's got much farther to go to catch up to eliminate those divergences. So right now we've got these areas of rotation in the indices, and you can see them right through here. This was an upper extreme on the spiders of 626, a lower extreme around 620. On the Qs, it's an upper extreme around 557, a lower extreme around 550. And in the IWM, it's upper extreme of 224, lower extreme around 218. So it's once we get to an extreme here, you can see we're trading within the middle of the range. So there's really not a whole lot to do here, except for the IWM. If it trades through today's low on Monday, that's going to open up the possibility of testing the lower extreme at 218. On the other hand, if it trades much above 222, it's going to suggest the test of 224. This obviously was a false breakout because there was no follow-through in today's trading. Now, breaking one of these extremes is going to be extremely important, because that's going to potentially give us the next greater degree time and price move. So watch that very carefully. Now, also in a rotational pattern, it's typical for volume to fall off, but what we can watch for is what's happening with market breadth. You can see market breadth got a little bit weaker in the NYSE today. Actually, this is S&P breadth. It collapsed basically in the NASDAQ. I'm surprised with breadth that's that weak, over 2,000 shares a week, that we didn't see more of a move in the NASDAQ. And of course, the IWM was fairly negative in today's trading too. But important to this is we can see that volume is extremely low, and volume fell off a little bit over the past couple of days. But we can see what's happening within volume itself in net volume. You can see net volume actually was pretty negative, and you can see over the last couple of days, even in the NASDAQ, that net volume was declining, suggesting there is more volume to the downside than to the upside. Same thing with the Russell, the IWM. You can see even back through here, look where price is. look where net volume was, and then even as we made this move here, you can see what net volume was telling us, that this was not a strong internal rally, and that potentially there was going to be some type of counter rotation or move back to the downside. IWM closed at the low of the day. That suggests that it wants to go lower in Monday's trading. So we want to watch that very carefully for Monday's trading. Now, on a daily basis, you can see the rotational pattern right through here. You can see what's happened with market breadth through this whole rally. We got a few days where we had the surges in breadth, but for the most part, you can see the trend is down. You can see what's happening with volume in the spiders. That's down also. And in the Qs, you can see market breadth was declining. Few instances, few days here where we had where it broke the trend line to the upside, but you can see the rotational pattern that's right through here. And then in the IWM, we've got basically the same thing. You can see the divergence. This is the high of yesterday taking out the high of the previous day. So you can see where breadth was compared to going all the way back to the 2nd of July. So you can see the divergence there that really suggested that that breakout move that we saw was not sustainable. Now, going back and looking at where we are in terms of support and resistance, in the spiders, we're looking at about the 617 area, which would be the lower extreme. And then, of course, yesterday's high. Taking out yesterday's high would suggest another breakout move to the upside. Trading through that 619 area would suggest potentially that we're going to see lower support levels tested as well. Watch 640 in the Qs. Of course, the high from yesterday is going to be very important as well. And then in the IWM, we're looking at yesterday's high as if it trades above that, we're looking at a test of the 230 area. And then, of course, breaking through 220 is going to open up testing 215. In terms of overbought and oversold, the indices are basically approaching oversold. The NASDAQ is oversold, but not at an extreme level. So this does not preclude the market from going lower in Monday's trading. And in terms of volume, you can see volume falling off. You can see the trend in volume is off. This is a 10-day exponential average of volume. So you can see it is falling off, and you can see the decline in net volume. Same thing is true with the NASDAQ. You can see the overall trend of volume is down, and then, of course, net volume falling off. It appears that 2 days ago we had a little bit of a surge in net volume, but for the most part it's been fairly negative. So what's going to be important for Monday is, at some point in time, if we test these extremes, those are going to be very important extremes, and especially if we break through them. I'm going to be watching what happens with the Russell, with the IWM, because if it breaks that low and if it breaks this low, then there's open territory all the way down to about the 218 level. A little bit different with the Qs. You can see breaking the low of today is going to open up trading down to about the 551 area. Breaking the high of today is going to open up trading up to the 557. Really not a good reward to risk ratio there. And same thing with the spiders. So really, I'm kind of looking for follow through with the IWM, and that's going to potentially give us the biggest reward to risk ratio looking forward to Monday's trading. Have a great weekend, and I'll pick this back up on Monday for subscribers.